Nathaniel, new job numbers out this morning. Start off by explaining for us the seeming contradiction between more people actually working and yet the unemployment rate goes up as well.
It's interesting, isn't it? What we have here is a total workforce that is growing. We have a number of people actually looking for jobs is growing, which isn't a bad thing. But as a result of that, you need to be producing a lot more jobs for your unemployment rate to be going down. And so that's what we saw this month, is we saw a relatively healthy number of jobs being created, but the number of people looking for jobs has also grown.
So how does Wall Street see this number?
Well, they view it as a sort of nice in-between. There were quite a few fears before this morning that the economy was weakening and that we were going to see that in today's number. And so I think a lot of the fears going into this morning was that we were going to get a very low number. For Wall Street, there was also a sort of perverse fear that the number would be too high, that the economy would have created too many jobs.
Too many people would be getting work.
Exactly. And the reason for that is the Federal Reserve. The sense on Wall Street was that if the economy is creating a lot of jobs, the Federal Reserve might be tempted to step back its sort of monetary stimulus programs, and that in itself might hurt the economy, investors, stock prices. And so what we got was not a number that was too high, not a number that was too low, just a very mediocre number, and Wall Street liked that.
A Goldilocks number. Nathaniel, thanks so much for joining us.